You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Henry the FLOWMASTER Schwartz from Cboe. The Option Block is brought to you by Cboe. When it comes to trading volatility, trust Cboe, the creator of the VIX Index, for in-depth and relevant information. Cboe's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of Cboe Global Markets Incorporated or any of its subsidiaries, collectively Cboe. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the Cboe products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again. Usually this is episode 2 of your bi-weekly options extravaganza. Of course, we are all off for the Labor Day weekend on Monday, so no show on Monday. I hope everybody had a great holiday weekend. You're ready to get back at it here now for your bi-weekly options extravaganza, at least usually called the Option Block. My name, of course, is Mark Longo from the THEOptionsInsider.com. as well as from the ever-engaging, ever-entertaining, ever-educational network upon which so many of you are binging these days. Remember, if you want more in your lives, and who doesn't, theoptionsinsider.com/pro, the place to go to learn more, or for you cool cats and kittens out there, /secret club. But don't tell anybody about that last one. That's just for you. And let's see who's joining me on the show today, because it's not just me on the show today. First, let's go out to the land that Skype forgot, a.k.a. the shores of Maine, where we are joined once again, cursing and sputtering as always, and shaking his fist at that technology beast that befuddles him. He is the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the show, sir.
It's a pleasure to be here, although I have kind of a sad tale for today.
Oh, no. Are the crickets all dead?
I had to throw some clams I purchased back in the water because I didn't. I left them.
What?
I know. Well, I had a bucket of salt water for them, and I left them in there. But there was a couple days they were still alive, and I just had to throw them back. So I actually purchased them at the seafood store down the road. And since I didn't eat them fast enough, I just put them in salt water, take care of them. And then I'm like, I don't feel like eating them, so I had to put them back into the cove. I think I'm the only person that's repurposed clams.
So you're a reverse clam pirate. You are giving back to the clam pirates because they're going to come along and take those now, like tomorrow.
I know it is odd, but that was my morning. That was my morning.
Wait a second. What if somebody collects those clams now and eats them?
They're going to sell them back to him for a high price.
I did not toss them where they usually pull the clams up. But I think, actually, to be quite honest, the clams were perfectly fine because they're still healthy in their little, those little arms or something. But I put them more into where the rocks were, so the clammers don't dig in that spot anyway. Most likely, they will be crab food. They're probably already been consumed by the crabs.
Oh, there you go.
Because they weren't in the mud; they were just on top of the mud.
More than you ever probably wanted to know about the clam ecosystem on the shores of Maine. And that other voice means we are joined once again. It is Thursday. It is time to roll out the Cboe hot seat, where we are joined once again by the FLOWMASTER himself, Mr. Henry Schwartz from Cboe. Mr. FLOWMASTER, sounds like you've been slumming it in between episodes. Who you been hanging out with, sir, when you haven't been talking to us?
Well, I got a last-minute invitation to go to MIT for a 50th anniversary of the Black-Scholes-Merton model, and actually got to spend time with Myron Scholes and Robert Merton and a bunch of other really amazing professors and academics in the option space. It was a phenomenal experience, and I'm feeling very lucky.
There you go, the FLOWMASTER hanging out with luminaries in between episodes. Doesn't seem like it's 50 years old, but on the surface, obviously, the Cboe is that, so it has to be empirically. It doesn't seem like that formula should be 50 years old, Mr. FLOWMASTER. But that's where we are as we head on into the start of the show. We are also joined fashionably late, as always. He is, of course, the prima donna of the group. He is the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, how are things in the hinterlands of Chicago? So are you also throwing clams back, this time into the Fox River?
Nah, no clams in the Fox River, but all is well. And that's really cool that the FLOWMASTER got to hang out with the Nobel Prize winners. I always thought it was too bad that Fisher Black passed away before he could have enjoyed the Nobel Prize. But nonetheless, still really cool.
Very cool indeed, as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, let's get to it. Time for the old Trading Block, the portion of the show where we break down what the heck is trading. And it's another one of those days where everything is kind of all over the place. So coming into the start of the show, we are seeing the S&P once again tilting to the dark side, off about 0.4%. So last couple of sessions, we've been leaning pretty heavily in the red, right around 44.5 right now in the S&P. So still far above where we were a week or two ago when we were dancing with 4,300 out there, listeners, but also back below the 4,500, 45.5 levels we were hanging out at not too long ago as well. So the S&P off, not quite 0.5%, but close to it. The Dow still managing to be up about a tenth, actually 0.15%. The NASDAQ, though, taking a bullet off a little over one, about 1.13%. So, again, another one of those days, kind of depends where you look, what's going on out there. That means our vol friends, after just getting annihilated post-Jackson Hole, I mean, they just took a shotgun to just every vol product on the planet, finally managing to hold up, actually getting a little bit of juice back. VIX back up to a nice, frothy, speculative 15 as we kicked off the show. It seems like a ton of vol compared to where we were hanging out not too long ago. Will it hold out there for long? It passes prologue? Probably not. But we shall see. Maybe this sell-off will exacerbate, and we will hang out north of 15 for the rest of the show. VVIX getting a little bit frothier again, getting some of its luster back, up about 10 points at about a 90 when we kicked off the show. VXX also up, but up slightly. You know, it takes a Herculean effort to keep VXX up these days. At about a 22 even when we kicked off the show, up about a quarter of a point. UVXY 15 also up, but again, up about a quarter of a point. You know, if you've been watching the vol space, if you've been listening to shows like Volatility Views, you know just how much has come off of those products recently. So you know how much effort it takes to prop them up. So a quarter of a point may not sound like much, but it's actually a fair amount. SVIX coming back down the other way finally. SVIX at exactly a 30 when we kicked off the show. Man, the tale, the saga of that product over the past 6 months just been insane. Whoever would have thought a million years the SEP 35s, we were making fun of those not too long ago, would actually come into play, and yet that's where we're living right now. UVIX 3 1/4, who cares? Up 1/10 of a point. They don't care about it, so why should we? And VolQ 18.5, up 1 1/4 points out there. All right, so we set the table. We got to go back. We got to start in the land of the FLOWMASTER because he's been hanging out with luminaries and dignitaries. Mr. FLOWMASTER, any interesting nuggets or takeaways from that 50th anniversary dinner? Did Myron tell you any inappropriate jokes between courses of the meal? And then what else was catching your eye out there, sir?
There was some pretty interesting presentations. One of them was a professor named Jun Pan, who you may remember from the Pan and Peteshman paper, came out around, I think, maybe 2008 on information content in option flow. She was there and actually presented a new concept she's working on, which is basically quantifying the market implied probability of a crash. So not just, basically VIX is good to kind of understand an overall volatility. And what she was looking at was really the likelihood of an instantaneous significant down move and how that changes over time. So that was really interesting. And then there was a lot of discussions about real options, which is kind of the concept of looking at any asset that has the potential for kind of an upside payoff as an option. And that kind of comes into play. When we all talk about like some of these $1 and $2 stocks, we kind of say, well, geez, the whole stock is an option, right? Because it can only go to 0, but maybe it can go to 100. I mean, the payoff looks just like a hockey stick call payoff, right? So there was a lot of discussion about other assets and how the same concepts apply. It was really spectacular.
In addition to rubbing elbows with options luminaries, sir, what is catching your eye out there in the markets today and indeed this week, sir?
Well, I mean, it has been an interesting. We've had it. I would call this a little bit of a down move. It's 3 or 4 days of VIX going higher and 3 or 4 days of broad market trading lower. I don't see any panic or anything, and we've talked about this before. I mean, the market has been doing really well. Kind of in the face of a lot of predictions of some pretty serious headwinds in the macroeconomic world. I don't know, the latest kind of fear, recurring points that I've heard are about deflation in China and kind of the impact that could have on the global economy. But I think this, I've said this before, when we get a pullback or a shakeup is great because that's when stock pickers kind of really get to pick their spots, right? You see a lot of reshuffling of the deck chairs, I guess. And so, it's a good opportunity to kind of get into some of the names. If you like a name and it's really beaten up, I'm kind of thinking about Disney right now. This is the kind of opportunity you wait around for, or structuring a trade that lets you get in the way that you're comfortable.
Yeah, Disney, I had a feeling you're going to get there. Probably get there a little bit later in the show, I would imagine as well. But yeah, they're coming for that one today, which is, again, surprising that the Dow can maintain its green status in the face of all that red on Disney. Disney hitting over decade lows out there. I think you have to go back to 2014, if not earlier now. I have to check for today's level there, back in a 70 handle, 79 and change. So intriguing stuff out there, not looking great for the House of Mouse, at least right now. Let's go out now to the shores of the Fox River, where Uncle Mike is hurriedly digging for his own clams. Mr. Uncle Mike, sir, what is catching your eye out there in the markets? And have you been rubbing elbows with any luminaries since last we chatted, sir?
No luminaries. I got to play in a celebrity golf thing for NFL people, but no option luminaries. They had pro football players. They typically don't talk about option trading, unfortunately. So that's one thing that I've learned.
Any good football luminaries sneaking in there, sir?
I got to meet Doug Plank. And if you're a Chicago Bears fan at all, you know who Doug Plank is. If you don't know who Doug Plank is, then in my opinion, you're really not a true Bear fan, because he wasn't like a perennial All-Pro, but he was number 46. And the 46 defense that Buddy Ryan invented back in the 80s that was so famous back then, it was actually named after Doug Plank, who wore number 46. And he just hit so ridiculously hard that Buddy Ryan named his signature defense after him. And I got to meet Doug Plank.
Well, there you go. I learned something today because I do not know Doug Plank. I am a latecomer to the Bears scene. I will admit that. Yeah,
if you go to a Bears game, the Bears mascot, he's wearing a number 46 jersey in honor of Doug Plank because he was that bad of a dude.
Clearly, everyone talks Butkus. Clearly, I got to look up this Plank fellow, sir.
It's definitely he's a deep cut, but it's one to where I'm typically not a starstruck person at those things, but when I saw him, I'm like, I got to meet you. And so the man talked to me for about a good half hour on old Bears stories from back in the day. And someday when we have more time, I know how Mike Singletary really got his nickname of Samurai, the true story behind it. Nothing evil or bad, but it was very interesting. So that's the only luminary I got, but Doug Plank did not want to talk option trading, unfortunately.
He said, what are your thoughts on black shoals versus binomial trees, sir? And then
he did not ask that. But in terms of what is catching my eye today, there's this fruit company that's not doing so hot today. And I think it's out of the fear from the deflation from China, like the FLOWMASTER was saying a little bit ago. But I think that's kind of the news from China is what's driving Apple down, and Apple's what's driving the market down. I don't think it's humanly possible. I mean, I'm sure it's possible, but it's very difficult for the market, the S&P or the NASDAQ, that is, to have a green day when Apple's down $6. That's just tough to do when it's such a, regardless of how much of the market Apple makes up, it's very difficult for all of the people that are in Apple because Apple is just such the benchmark stock of this market in a lot of ways. I think that's one of the reasons that we're down. I mean, Microsoft is also down on the day-to-day. Not a ton, but it's down a couple dollars on the day-to-day. NVIDIA down roughly $14 on the day. So a lot of this has to do in terms of for lack of a better term, a tech wreck, but it's not really much of a wreck. In terms of the sectors, XLK, the ETF that tracks the technology, that's down 86 cents on the day. All the other sectors are there. Some of them are down, but not a lot, and some of them are up. So for the most part, on the day-to-day, I blame Apple. I think that needs to be the main culprit of it, but what the heck, Apple's built our market the last few years, so you can't really be too mad at Apple. A couple other things that I'm seeing is that we're getting closer to the lows on bonds right now, and it'll be interesting to see if we are just going to sit here forever or we could bounce off of them. That's another thing that's lighting up my tape that I'm seeing. We're down a little bit in silver on the day, down to a little over 1%. And for right now, I think just with the overall market doing what it's doing, today's just kind of a good old-fashioned pullback. Apple's down. Not even that. I mean, we're down 15 points in the S&P, but Apple's down. It's kind of dragging the market down, in my opinion, and we'll see if buyers can come in.
All right, intriguing stuff. And last but not least, let's go out to the place where when he's not talking to us, listeners, he's just throwing clams out the window, willy-nilly. Mr. Rock Lobster, sir. What is catching your eye out there in the markets today, sir?
I realized that Henry was worried when he orders his next bowl of clams and linguine that he was going to get some old rock lobster
he's
clams.
He's going to look at it twice now. Did these come from the coast of Maine? If they say yes, he's just going to throw them right back at the waiter's face.
He's like, take them back. I will not eat this swill. Anyway, you know what I'm noticing? Like a lot of sort of I like FinTwit. I don't really believe much I see on it. It's kind of like a bad movie sometimes. You've had a couple of things where there's been some stuff posted about NVIDIA faking earnings or something, which I find implausible. I guess anything's possible. I just don't believe it really. Not like NVIDIA. It's kind of it's not like NVIDIA needs to find a market for their chips currently. But anyway, then the Apple thing, I think what is real or feels more real is, NVIDIA in China are relatively, in Taiwan Semiconductor, even Tesla. There's this technology war, this kind of back and forth, not back channeling, but kind of in the media, like America, like we're not sending them good chips, and then the Chinese fight back with, well, we're just not going to buy your stuff, and this goes back and forth. But there's something to it, because everybody, they're still in the back of your head that, and I guess the U.S. now may be embargoing. I don't know, but they haven't done it recently as far as embargoing products. But there could be some kind of escalation in a technology battle, and I think that hurts Apple because it's pretty high multiple. Apple has had drawdowns of 50% or more from a peak price to a low. When people realize that maybe the current multiple isn't sustainable. So I think that there's something to it as far as Apple goes. So and I think, but what you're not seeing is like you're barely seeing really any lift in volatility. I mean, VIX is up. We can't even hold the 15 handle. The SPX is not holding down. So it's really, if people are selling their Apple, they're going to buy something else. And there's a lot of people that made a lot of money in Apple. So the fact that, it's probably better for the market if Apple goes from 200 to 150 overall, because some of those dollars might go find some other stocks. As far as just watching Disney, I don't know. I think Disney's sort of suffering from this. People don't want to buy their stuff, and they got to make better stuff, which is what happens to a lot of companies over the years. So I'm sure they'll find a way to, but yeah, the stock is cheap, but it's like there's a lot of stocks in the U.S., even though the indexes are relatively at high levels. I mean, you look at a lot of commodity stocks. The banking sector apparently is now the next shakeout will be their commercial real estate loans. There's always, like, I guess, because you guys everybody's been around a little bit, but there's always this, wall of worry that the market climbs. These are not, nothing I would view as like catastrophic worries. And I think that's why VIX is just barely, it's more or less responding to intraday moves right now. And since it was just coming from the 13 handle, literally, to 1486, and Apple's kind of fallen out of bed, I think the move is kind of fair. So I don't see a lot of, at least for right now, not a lot of cause to worry. Although, and none of the curve ever backwardated, meaning none of the short-term vols really jumped higher than VIX. And until that really starts to happen, I don't worry from a vol point of view. Although it's been a pretty good week at Option Pit for all of our products, because we thought implied vol was like a little too low because of the holiday and everything. Some of the weekend adjusted stuff, got down to single digit vols. So the strangle trades, they're still working because a lot of volatility, I think, is underpriced for short-term moves. So, and that's basically what we've been trading. So, anyway, from that point of view, it's not going to surprise me today if this is kind of how we stay, that VIX actually closes red on the day. It would not surprise me at all. So, if Apple's the only game, or maybe the Chinese, or we take some multiple out of Tesla or Apple because of that, then I think it's probably a healthy thing overall, and maybe some money starts finding some less insanely priced stocks.
No such thing, sir. They're all crazy out there. Let's go out to the volume. Let's see what's on the docket for us here this week. Let's go out first let's go to land of VIX, because it's been interesting to watch VIX in light of all the fun of late. We were saying just how stunning it was that the volume for VIX stayed frothy, stayed effervescent out there. And speaking of numbers, let's pull it up here really quickly, because We were talking about it with the FLOWMASTER not too long ago. He was predicting a pretty robust month for August. Turned out to be the case. Our second 1 billion contract month on the year, listeners. 1.02 billion to be precise. Can't quite match. I believe it was March. That was a little bit north of that, but probably the overall, I do believe, the second busiest month in the history of the business. The fact that it was August is still just bonkers to me. That, August, usually the place and time when the market goes to sleep and everyone goes elsewhere, the south of France, the Hamptons, and yet 1.02 billion with the B contracts on the tape. A couple of interesting nuggets there. Index options up 41%. I wonder what's driving all that, listeners. That's year over year now. And ETF options up 29%. Standalone single name equity options actually kind of treading water, down 1.6%. So it wasn't your Apples and your Teslas that was driving it. It was SPX and all that fun. And VIX Futures also lighting things up out there. 24.7% increase for VIX Futures. Mr. FLOWMASTER, I know you were predicting a robust month. It came in pretty robust, 1 billion in August. Pretty crazy. Any thoughts on those overall numbers, sir, and the fact that we hit them in the dog days of summer?
I agree. It's impressive. It happened during August. It's funny, in preparation for this conference at MIT, we went back and looked at that first day 50 years ago, right? And 910 contracts traded on that first day.
That's actually more than I thought. I thought it was going to be like 8.
Yeah. No, actually, it's better than some of the products out there. But so that in 73, 1.1 million contracts traded in the whole year. So, we're basically running about 10,000 times that now, which is pretty impressive. And obviously, you mentioned the 0-day index flow still, is incredibly strong. We had a paper out today from Mandy Zhu, who's our strategist at Cboe, talking more about the 0-day SPX phenomena. I asked Myron Scholes about it when I had his ear for a minute, and I said, "Did you ever think that we'd have daily expirations and that they'd actually be very actively traded?" And he said, "Well, we spent a lot of time trying to convince the world that options were not simply gambling." And he said, "I guess it must have worked." So that was great to hear.
That is pretty funny because you're right. They ran away from it for so long, right? And now they are just fully embracing it wholesale out there. Clearly, it's working because the folks are liking themselves a little bit of the old 0-day. Let's see if they're liking themselves a little bit of VIX right now today, listeners. And the answer right now is, I guess, kind of maybe. 388,000. That's probably not as much as you were expecting, but also given the fact that the ADV has come in a little bit since we last chatted a week ago, come in about 75,000 contracts, down to 650,000 exactly right now. So it seems like we're finally starting to catch up with what we expect in the dog days of summer now that we're in September. It's kind of weird, but that's how things are rolling right now. SPY, though, looking robust, 4.7 million contracts on the tape. The ADV, about 8.5 million there. The S, 1.7 million, so folks still slinging some 0-day. If this sell-off exacerbates or we see a little bit of whipsaw action, wouldn't be surprised to see that number pop. ADV, 2.92 million out there. The small caps looking pretty robust today. 665,000 contracts on the tape right now for IWM. The ADV, 827. IWM off not quite a full percent, about 0.85% right now. So small caps taking it on the chin and putting up some numbers today. And the Qs, as to be expected, 2.4 million. The ADV, 3.77 million. I was kind of surprised to not see the aforementioned Diz in our top 10 today. In fact, you got to go all the way down to number 17 to find Disney. They're still putting up a respectable 158,000 contracts. Normally in late summer, early September, that would probably be enough to break into the top 10, but not today. Today, the top 10, you got to be pretty much at 250,000 contracts. That gets you up to our friend Palantir, trading right around $15 right now, off about a quarter. This thing's been all over the place over the last month. It's bid, it's offered, it's bid, it's offered. It looks like they hit it down to about $14 and change. That was the low over the last month. And the high was around $18. So kind of been all over the place. $15 right now, hanging out. Good for, again, 249,000 contracts. And the number 10 spot, number 9. We've got my old stomping grounds. Good old INTC hanging out at 280,000 contracts on the tape today. INCL up $1, so managing to buck a trend today. $38 pretty much exactly out there for the number 9 spot. Number 8, Chip Zone coming a little early again today. AMD, 329,000 contracts on the tape. They're off about $2.50, trading 106.82 right now. Then we go off to that seemingly endless spinoff from J&J, K-View. It's kind of been on our radar now for a while. Putting up some numbers again today. Number 7, 422,000 contracts. This is, of course, Kenview. Trading $21.50 right now, off about 90 cents. So obviously a lot of deal arb going around on this one. Number 6, the Amazonians. They've had some rough headlines of late as well. Whenever the regulators come sniffing, usually not a good thing. But the market liking them today. 453,000 contracts. Amazon up about $1.80. Trading 137.15 right now. And again, good for 453,000 contracts. And the number 6 spot. Number 5, going back to the meme land, it's AMC. 546,000 contracts on the tape. AMC trading pretty much exactly $8, off about 63 cents right now. And again, good for 546,000 contracts. Number 4, the artist formerly known as Facebook, it's Meta. 649,000 contracts on the tape. Meta, 298 and about a half, off about 70 cents right now. And then number 3, the other half of the chip zone. You can kind of probably guess some of these names in the top here. NVIDIA, 836,000 contracts. And that's, again, only number 3. Off $14.50 or 456 and a quarter is where it's trading right now. So apparently NVIDIA can sell off. And actually also has actually hit a high of about right around 502 just back at the tail end of August. So from there, it's off nearly $50. So intriguing stuff. Obviously, it's been on a runaway roller coaster for the year. It's still up 313%. So not shedding any tears out there, just intriguing to watch. And again, good for the number 3 spot today, 836,000 contracts. Number 2, this is a rare appearance at number 2, listeners. It's Tesla, bumped all the way to number 2, 1.71 million contracts, trading about $250.92, off about $1.15 right now. So yeah, a little bit of a rough day for Tesla out there. But again, it's a day that ends in Y, so they're going to be moving a buck pretty much every time you check them. Good for 1.71 million. You know what number 1 is today, listeners. Nothing can dethrone the fruit company. When China comes for them, the options market comes for Apple. Selling off yet again today, off about $6.50. Over the past week, it's off nearly 12 handles, a little over 6%. So yeah, the bad news when the Chinese government says no to iPhones. Market not liking that out there today. Didn't like it yesterday. Kind of a rough couple of days for Apple. Good for 1.86 million. And you know what I always say? When Apple is red, the market just has a frowny face. They don't like it. So then the rest of the market's going to look in the doldrums out there. In terms of earnings, it's a post-holiday week. Not a hell of a lot lighting up the tape, listeners. We had GameStop and Dave & Buster's yesterday and Kroger tomorrow. So if you're really excited about those two areas, we got them covered for you. And yeah, we had Dave & Buster's yesterday after the bell. And then we also had a good old GameStop yesterday after the bell as well. So we'll hit both of those right now because we have updated earnings move results for those. Really quickly, Dave & Buster's 37.5. They're pricing in 9.3%, listeners. They delivered 3.1%. So wow, dramatic underperformance there. And GameStop yesterday after the bell, there we go. Yes, $18.50. Well, that's kind of letting the cat out of the bag. GameStop was at 18.75 when we ran these numbers earlier today. They were pricing in $12.50, listeners, 12.5%, I should say. And in the past, and then they moved 2.8%. So another dramatic underperformance, I should say, here. For earnings, let's go really quickly to the season because I want to get to some of the flow we're looking at today. The season looking a little bit more robust again, back up to 102%. It was hanging out right at 100%, then it dipped to 98%. Back up to 102%. Can it hold that? I guess we'll find out. We'll also find out what the heck is on the radar of the FLOWMASTER because it's time, listeners, for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, listeners, it's Thursday. It's time for the FLOWMASTER to hold court and analyze some flow. Mr. FLOWMASTER, sir, what's catching your eye out there today, sir?
So I have a couple today, or I have three today, but notably two of them are kind of bearish. So usually I really gravitate towards call buyers because I do think that's the most pure in terms of looking for unusual flow that might be worth trading on. But today we're going to start out with a put buyer in a name that I'm not familiar with. The symbol's AVTR, Aventor. And what we saw was a buyer of just over 11,000, November 17.5 puts. They paid 31 cents. That was just after lunch at 12:10 when the stock was around 20 bucks, almost 21 actually. And this is an opening trade. It's a lot bigger than the average daily volume in there is only a total of 2,200 contracts. So it's a big trade. It looks to me like it could be a hedge. I mean, it's a biotech. It's not a biotech itself. It's a biotech supplier. But that one might be worth kind of trying to think why somebody would buy a slug of puts in there.
That is quite the slug of puts. This is Avantor Sciences. Yeah, it sounds like a biotech. They're a chemicals and materials company out of Pennsylvania, trading $20.71 right now. A year ago, they were trading about $26. So they have come off a wee bit over the year. They've had a little bit of tumult. They sold off to about $20 back in October. Then they rallied it again in February, back up to 25, then back down to the low for the year of about $17.91 in April, and then back up again. So the chart looks like a biotech, 23 1/3 in July, then back down again to where it is right now, 20 3/4. So kind of bopping all over the place here. And it seems like Mr. Rock Lobster, somebody looking for a little bit maybe, or perhaps worried about a little bit of retesting of those 52-week lows around 17.91. What do you think, sir, about all of these puts in AVTR?
I agree. It is a slug of puts. I will remark, though, Henry's picture with the Godfathers of Options is quite handsome. Quite handsome. I think that should be on the Cboe website.
Are you smitten with our FLOWMASTER, sir?
He just plays. He plays in a bigger pool. He's in the king pool. He's in the king pool. This is a big slug of puts. It again looks like purchase. And it's one of those things where if a drug company, biotech, whatever, their drug just doesn't happen, and then the stock goes to zero. So whoever this person, like normally this would be more like a line in the sand put, considering, but just looking at the purchase, kind of a, I don't know, it does look like a put purchase, but right now they're offered 35 cents. So whoever purchased them can have more of them. I guess they traded 31. So it doesn't look like there's a lot of, I'm just looking at these here. So, they're looking for a big, bad surprise, which, I mean, if you've noticed some stocks when they've, because there's an earnings that could be coming out there. And if they're not good, so it may be potentially an earnings play with this one, like looking for an adverse move.
Let's keep on rolling here to our next victim today. This is Clean Energy Fuels Corp. Gee, I wonder what they could do. Ticker symbol CLNE. Nice when you have a very descriptive name of a company out here. Trading $4.35 right now, up about 6 cents today. Not a lot going on today. On the year, let's see, a year ago it was trading 6 1/4, so they have come for it about 30% over the past year. They did actually manage to rally it in November of last year to the high for the year of 7 3/4. So from that high in November, they have really come for it. It is off over $3. That's quite the drubbing. Looks like the low came in the late April, early May timeframe around $3.84. So if you want to be glass half full, then they have rallied it a little bit from there, but not much. Overall, it's been quite the drubbing, off nearly 30% on the year. Mr. FLOWMASTER, sir, what did your eye of the FLOWMASTER spot out here in Clean Energy Fuels Corp?
So this is not a huge trade. It's $160,000 of premium, but somebody bought 3,000 of the October 4 calls, and as you said, stock's around 435. So these are already 35 cents in the money. But it was a buyer, and it was a pretty big trade for this name, and it is an opening trade as well. And I looked at it and was kind of wondering if maybe somebody's waiting for earnings at a charge point, which came out today and were terrible. And this is a natural gas provider for fleet vehicles or something. But maybe it's somebody kind of taking the pendulum away from kind of the electric vehicle world and back into clean fossil fuels, which I guess is what nat gas would be. But it's a pretty, to me, although sometimes when you see an in the money buyer, you do have to kind of wonder if it's really some sort of a synthetic put. But in this case, when the stock's only $4, I would just kind of take it as a bullish chunk, and they're in there for the leverage, but it's only out to October.
You mentioned our nemesis ChargePoint. I'm surprised not to see them on the top 10 today. They do 50 and 100,000 lots on a random Tuesday. So the day when they post earnings, they've only done 214,000 contracts. So they actually are number 13 today. So outside of the top 10. But I digress. Mr. Rock Lobster, sir, what's catching your eye out there? You like these? You like these Klein 4 calls, sir? You going to go all in on these?
This is a stock that I follow because it's one of the few green energy companies that makes money besides Tesla. It does have some earnings history and some sales and stuff. I always thought this would be kind of this stock would be more than it is. It's been as much as $17, $18, maybe 20, and then I just realized one of their biggest increases in revenue was they were getting more credits from the federal government for their, I was trying to come up with it exactly. Yes, environmental credits. They got another 27 mil. Their alternative fuels credit segment increased from 227,000 to 27.4 million. So it could be that somebody is riding the back of their potential for more largesse from the green store. And this stock has ripped on that before. So it would not surprise me if this call buyer made some dough on these calls.
You love your largesse from the green store. It's your favorite thing to talk about here.
I just don't get any of it.
You need some clam largesse. And then
that's what I need.
You'd be rolling in it over there on the shores of Maine as well. And Mr. Flowmaster, for our last one, we're actually looks like going back to Wednesday, a little bit of the old Flowmaster time machine. This is MetLife, a name we haven't talked about on the show in a while. Trading a little bit shy of $63 right now, $62.92, off about a quarter today on the year. See, a year ago it was trading $66, so they're off, but only mildly, about 3 1/4 handles on the year. They did get up to about $77. That was back in November of last year. So from there, obviously, they're down a little bit more. And they actually got lower. They got down to about $48.95 in May. So again, kind of glass half full. If you go back just to May, they're on a nice little tier. So interesting. And it seems like Mr. Flowmaster. It looks like maybe someone thinks that tier might continue. What did you spot on Wednesday, sir?
Well, so this was one of the larger open interest increases this morning. We have a command OI up, which shows the biggest individual contract open interest increases. And so these are the November 67.5 calls in MetLife, as you said. Stock's around $63. So, these are some upside calls in MetLife. And the trade yesterday, it's funny, it took a little bit of double checking. So what I thought it was a buyer of almost 14,000, 67.5 calls in November for $1.01. The trade on the Amex just before 11 a.m. when the stock was 63.28. But I dug a little bit deeper and was able to confirm this was actually a seller, and it was a floor trade, and it's marked as such. And we know that floor trades, you got to be extra careful because of the human element can be misleading when it comes to the timing and the bid offer. And so, this stock, to me, I looked at it's kind of the middle of its range, and this I would bet you this is just a call writer who's decided that they'd rather just kind of lock in some yield rather than kind of look for the stock to go back up another 10 or 15% into the end of the year. So as I said, this is the second. It's slightly it's not outright bearish because they're keeping the stock that I would assume that they have against this. It's not really a bearish trade, but it is kind of a trade where it tells you that they don't have a ton of hope that the stock's gonna have any big upside breakout. So just a chunky call seller. That was what stood out to me.
Chunky call seller. That's good. I like it much better than buying it, and I'm sure they're probably happier right now with overwriting these than they would have if they bought them back on Wednesday. But we're always happy when we get to a little bit of your questions. Let's get to it now, listeners. A little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. I'm going to get to this question here from Stan J. He's been waiting patiently. He sent this in a while ago, and we've had holidays and just busy jam-packed shows. Haven't had a chance to get to it. But Stan J wants to know, can the options all-stars, that's us, discourse on this whole big short guy apparently buying all the puts on the S&P? What the heck did he actually do? WTF are 13 Fs? And what, if anything, should actual traders make of this seemingly clickbait headline? He was referring to this headline out of Reuters. Burry, famous for Big Short, bought bearish options against the S&P and NASDAQ 100. This story actually broke back in mid-August, August 14th or so. So, yeah, interesting stuff. I'd say the first thing, Stan J, is whenever you see people quoting notional value of options trades, it always rubs me wrong. I can't stand that. It drove me crazy in the crypto space for a long time. Everybody just quotes everything in notional because there's no real volume to speak of yet. So it drives me crazy. So when you see notional to make a trade like they talk here about, he bought put options against the Qs with a notional value of $739 million. That is a meaningless number. Just discount that at its face. Notional value for options is a meaningless thing. But that said, Mr. Flowmaster, you're actually out there. Your platform actually does track these 13 Fs. So maybe let's start there. What are your thoughts, as Stan J wants to know, on what the, as he puts it, the big short guy, what he did, and WTF are 13 Fs, and what should people make of this news, sir?
Well, I agree with you. When stuff is showing up in mainstream media or your relatives are calling you to say, hey, I think it's time to short the market because I saw that this Michael Burry guy is short the market, that's definitely the time not to do that. 13 Fs are disclosures that are required by asset managers. They're public filings. And you're right, in Trade Alert, we've done this for, about a decade, you can actually dig up the information on the option holding. So if in the system you type in /holdings Scion, which is the name of his hedge fund, you'll actually see the two positions that they're talking about. And it says that they have 20,000 puts in the Qs and 20,000 puts in SPY as of the last filing date. The thing with 13 Fs are, and you need to understand this, first of all, they're only released quarterly, and there's a 45-day lag, so it's possible by the time the filing is released that the position has expired. And you have no more information except that it was 20,000 contracts in those two ETFs. But the other thing that's important to keep in mind is that 13 Fs only require the reporting firm to report long positions. So even if you were short a call spread, you're going to show up long calls. So and if you think about it as well, anybody overwriting just doesn't show up at all. So you have to take that information with a grain of salt. I tend to refer to it as it's very good to know what names people are involved in. So if you dig up the whole in our system, you can look it up the other way. You can say, show me the 13F holders in Tesla. So you do /13F Tesla, and you can see all of the dealers and the hedge funds and liquidity providers that had option positions, and we just rank it by their percentage of the total open interest. And big surprise that the top one is a big giant firm in Chicago that you know of, and the other one is in Bala Cynwyd, Pennsylvania. They're usually at the top because they have all of the positions. It's open interest related, it's not activity related. So that's what 13Fs are, and we actually sell the data too at datashop.cboe.com. You can actually just buy the raw file as well if you want to pull it into a spreadsheet and do some analysis there.
Well said, sir. That's why we have the FLOWMASTER on the show. Short answer, Stan J. Yeah, don't get all worked up. 13F's lagging indicators, as Henry mentioned. They don't tell you all the information. And Henry, for the love of God, why can't they just say 20,000 puts, right? That's not sexy enough for the headline. They have to say 9 million notional value of puts. I guess the editor decided, 20,000, not sexy enough. Let's calculate this meaningless notional value number and put that in there because that makes it sound sexier. So don't get all bent out of shape, Stan J. It makes for a cool headline, I'll give you that. But outside of that, once you see the devil is in the details with these, as it usually is. As we keep on rolling, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, let's go around the block. Let's start with the uncle list of Mike's. Mr. Uncle Mike, sir, are you terrified? Are you all bent out of shape that, as he puts it, the big short guy is short everything? B, what are you keeping an eye on in the market until we come back together again next week, sir?
Well, A, just based on the FLOWMASTER's analysis of it, the big short guy might theoretically not be short because not everything could be in there. There could be more of the story. So that's always good to know. In terms of what I'm watching before our next episode, curious to see if Apple can catch a bid down at these lower levels or if this is the beginning of, as the Rock Lobster put it, having us go down to the 150 level. Watching that's probably the main individual name with which I'm watching, just because of the fact that it's hard to have an update when Apple has a down day. And then we're right in the middle right now between 44 and 4,500 with the SPX. So watching to see where we land on there to see if we go down, if 4,400 supports it. And if we go up, does 4,500 contain it? And that's what I'm watching.
Mr. Rock Lobster, same question for you, sir. Are you terrified that the big short guy is all short, at least according to that article? We saw the real truth here on the show. B, what are you keeping an eye on until our next show on Monday, sir?
Yeah, when I first looked at that, it's the same as everybody else, like, oh my gosh, And then also you had like some long positions. So it's kind of like, I just think he had kind of like a big backspread, sort of. Like he's long a lot of stock and just long a lot of puts. And he's like, okay, let's see what happens. Anyway, as far as this week goes, I like, again, like how are those high multiple stocks doing, like Apple and Nvidia and stuff? Is money moving out of them into some of the lower multiple stuff? Yeah, like I don't know if you can make that case quite yet, at least for today. So, but as the day stands, I think Vol's going to be down on the day. So all the people that didn't dump their puts are going to be grumpy because VIX is only up 33 cents today. So I'm taking the week off next week. So I literally have almost no positions on, and I'm not putting anything on, no matter how tasty and delicious some things do look here. But yeah, I think by tomorrow, if we don't have any action, the VIX will be 14 again, and the S&P 500 will probably, wander somewhere close to 4,500 again, just because that's what it's been doing.
And last but not least, Mr. FLOWMASTER, sir, what are you keeping an eye on until your next appearance next week?
Just kind of general. Like I said, I kind of think it's nice that volatility's bounced up a little bit. I agree. If you look at the chart, and we all know volatility's mean reverting, but the challenge is you never know when it's going to go back down or back up. But it certainly does seem like we got to that kind of extreme low end, and bounced back up off of that. Right, there is kind of a fundamental bottom to VIX. Right, it has been in the single digits, but only a few times, and most of the experts agree it can't really ever go below 8. But I think we've earnings in Oracle next week, and I'm just going to be kind of looking for some sideways motion. I did, based on what we were talking about with Scion Capital, which is Burry's fund, you can see his longs. And they're a bunch of weird stocks that I barely have ever heard of. Things like the Real and QRTEA. And so I agree. What he may have is, kind of a broad hedge on the market, and then he's long some of these kind of funky names. Actually, at the conference, there was some discussion about looking for zero beta stocks because if you can find a stock that is uncorrelated with the market, it's actually something that you want to own, which was kind of interesting too. So, and looking at the symbols in this list that he's was long as of the end of June, there's a lot of weird ones on there. So that might be it.
Ah, yes. The real. I'm talking about that one on the show in a while. We've had some fun with that one in the past. Unfortunately, listeners, that music means that's the end of our fun, at least for this show. If you're hanging out in the live, join me in a little bit for This Week in Futures Options. A lot of fun to be had there on the futures options side of the fence. But before we go there, listeners, let's go back around the horn. Let's start with the Uncleist of Mikes. Mr. Uncle Mike, sir, if folks want to get more Uncle Mike goodness in their lives, where should they go? What should they do?
Check out my website, stcharleswealth.com. Follow me on Twitter, at Mike TOSAW, TOSAW, if you are looking for a financial advisor who's not afraid of the option product.
And also hit him up if you want some interesting stories about former bear luminaries. He's got some tales to tell you over there. Give him a follow at Mike TOSAW, TOSAW, on the old Twitters. And Mr. Rock Lobster, before you embark on your grand vacation, sir, if folks want to check out what you got cooking, where should they go? What should they do?
Go to optionpit.com. We actually, if you go to our website, or I don't know where it is, but we had the Jam Croissant talking about Vanna and Charm yesterday at Option Pit. I had a lot of people check it out, so really good if you want to learn more about how volatility works and how it affects the S&P 500 and vice versa. It was pretty cool. And also, go optionpit.com, 888-TRADE-01. Listen to the show. You get 10% off anything. Say I sent you. Or Money Map Press. I believe the number 2 product or the number 1 product with as many trades as I have in 22 and 23 at Money Map Press. So if you want to put your VIX and SPY on and beat the market with owning SPY puts the whole time, give it a try. If you want to learn to trade VIX and SPY, go check it out. And that's about it for me.
There you go. Check them out, optionpit.com. And last but not least, Mr. Flowmaster. If folks want to check out all of these various tools for themselves, they want to search 13Fs, they want to do some deep analysis, they want to check the changes in OI, where should they go? What should they do?
Just head over to Cboe.com/RMA, which is Risk and Market Analytics. That is my team, and we're happy to set people up with trials. If you want to take a trial and poke around at the 13F data, that's a good way to do it because that data is relatively static until you get to the quarter end. So Cboe.com/RMA.
There you go, Cboe.com/RMA. That's going to do it for us right now. Back in a little bit with This Week in Futures Options. Back again tomorrow, noon Central, 1 p.m. Eastern for volatility views. Then after that, for all you cool cats and kittens, you come back for Options Oddities. Then back again on Monday, another episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by Cboe. When it comes to trading volatility, trust Cboe, the creator of the VIX Index, for in-depth and relevant information. Cboe's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.